Hello, everybody, and welcome to another edition of DayTradeSPY.com's Week in Review. I'm just waiting here. A lot of people still joining us. So before we start the recording, let's just go over a couple of housekeeping items, and then we'll start the recording and we'll start the session. All right. And all right. So anyway, my name is Hugh. Aaron, good evening. Are you there, Aaron? Hello.
Yes, I'm here. Good evening. How
Awesome.
are you?
Great. Thanks. All right. Yeah, just waiting. A lot of people still coming online here. So, folks, sometimes I speak a little bit too fast when the time comes to, having these webinars. If you find that's the case, just let me know and I'll slow down. There's a questions box. You'll find a little questions box icon on your Zoom dashboard. Just click on that. Aaron and I are the only ones to see that. So go ahead and say whatever you want. And how's the sound, Aaron? Everything okay with the sound?
Yeah, there's no echo at all. I can hear you loud and clear.
Yeah, it sounds good. You having a good weekend there? You guys doing anything special?
Yeah, so far so good. I helped my friend on a small project, and then I took my daughter out to a trampoline park, and we had a good time. So yeah, had a good weekend so far. How about yourself?
Not bad. Just kind of stuck around close to home. Took my daughter out for pizza a couple nights ago and had a good time. Can't believe the price. You guys go to restaurants lately? It's not cheap. Oh my gosh. Pizza, a couple of small glasses of wine, dessert. What else do we have? It's like $130, $135. What the hell? What really? What was this? Where did this come from? Yeah, it's crazy. Ever since COVID. Anyway, it is what it is. And that's fine. And I think we're going to start now. All right, anybody who's going to be late, don't get caught up. Excuse me for saying, still fighting a sore throat. There's nothing worse than having a cold in the summer. You just can't seem to shake it. But anyway, you're there. We are here. And let's get going here. And good morning, everybody. Good morning, good afternoon, good evening, depending on where you are. Good evening here for us. We're on the Eastern time zone right now. It's just a little after 8 o'clock. Welcome to DayTradeSPY.com's Week in Review. My name is Hugh, along with the infamous Aaron Stevens, sitting in as the co-host here tonight. And it is Sunday, August the 6th, 2023. I'll just give you a second here to read over this disclaimer. Keeps lawyers busy. Not sure why, but we need to keep them eating too. I guess they have to eat. So anyway, we'll give you a second here to read over that. I think you all understand that you alone are responsible for all your own trading, and past performance does not guarantee future results. No guarantees in this business, folks. No guarantees, except one guarantee. That is, you will definitely lose your money if you do not know what you are doing with options. All right, so before I go further on this, I just want to ask everybody here, are you all familiar with options? If you are not, let me know in the questions box. Okay, let me know in the questions box. And I will stay afterwards and go over some basic options, not strategies, but just basically what options are and some terms, definitions, all that sort of stuff, and answer your questions there. So, because I don't know, there are a lot of people online, and I'm pretty sure there's probably some new people who maybe not know what options are, but I don't want to kind of go over all that if you're all very sort of familiar with what options are. So if you are new to options, let me know in the questions box, and we'll stay later after the session. All right, so Week in Review, there I am. And I don't know if you can see me or not. Maybe if I change the color of the slide, it might show a little, won't show me quite as dark. How's this? Is this, maybe if I go a little lighter here? Let's see if this helps at all. Or would it help? You know what? I'll just torture you with this. That's okay. Anyway, it's live, right? It's not pre-recorded. So let's get moving here, folks. Okay, so Aaron, we can't see. We don't have a camera on you, Aaron. That's something we should probably work on next. People want to see you. People want to see you. I had a lot of not a lot, but I've had some ladies say, "Hey, Hugh, is that Aaron? Is he like single or something? You know, would he be interested in going out for coffee with me if I come down to Maryland?" I say, "Hey, listen, you know what? You'll have to ask him." I always say Aaron's the better looking guy and I'm the smarter one. Or did I have that the other way around, Aaron? I can't remember now, but anyway.
No, I think we're both good looking and smart, to be honest.
Oh, thanks for that. Anyway, all right, gang, let's get going here. Weekend review. Here's what we're going to do here. Going to give you a bit of an introduction. Take a look at the weekend review and what's coming up here. I like this, Rick. You look fine, Hollywood Hugh, he says. Going to look at next week. Next week, what we can expect for next week. And also do a little fireside chat. This is where you're going to just ask any questions you want. I don't care. We can talk anything, nothing's off the table here. You can talk about anything you want and how we can help you. All right, because this is really what it's all about. Aaron and I don't have to do this. We want to do it because we want to see you make money. We want to help you. Gives us good purpose in waking up every morning, which is what I really like to do. I need purpose. A lot of my friends, Aaron, are I don't know about a lot, but some are retired now and they don't know what to do with themselves. I know some of these guys, they get up and they just kind of wander over to a local coffee shop, sit down, have a donut and coffee, and talk to whoever just kind of walks in. What kind of life is that? I don't know. Maybe they enjoy it. Who knows? But it's not for me, and I will never be that guy. So anyway, I'm here to do whatever I can for you, and hopefully you'll gain some good knowledge and from my experience. You know what they say, learn from the experience of others, because you're not going to live long enough to make all the mistakes yourself. So let me ask you a couple of questions along the way here. I just kind of get a little engaged here. Please answer in the questions box. Have you guys taken any, when I say guys, I mean guys and gals, have you taken any other courses in the past? And maybe even feel free to comment on your experience with other courses. Did you learn anything? Did you learn a lot? Did you learn enough to make some money on a consistent basis? Were you impressed with the presenter, and then you take the course home and you found that maybe it wasn't quite for you or quite what it was sort of, how they held it up out there and all this. This is it, man. This is it. You got to get this, and then you go home and you say, oh, I don't get it. Anyway, let me know what your ideas are, because I kind of want to see where. Okay, a lot of yeses, a couple of no's. Okay. All right. Well, we don't want to be that course, right? That you're going to say, oh, why did I take another stupid course? Why did I spend money? Anyway, we're not here to sell you anything. We don't want to sell you anything at all. We're here to just provide good service and help for when you need it. Okay. Bit of a background. I come from the corporate world, corporate America. I'm sure many of you do too. And I used to hand out a lot of my money to my financial advisor, only to find out that he did not have my best interests in mind, or if he did, he was incompetent, inept, and whatever you want to call it. But it did not work well for me. So I took my funds back, what little was left, and I learned how to do this myself. And yes, I took a lot of those courses too, probably many of them, and we're sitting in the same classroom as together. And I was the guy that would ask that question in the back of the room. So, Mr. Presenter, you trade your strategy too? And they always say, oh no, I don't trade. It's too risky for me. I couldn't believe they would say that. Wow, but they did. Thank you for your honesty. Close up my books. I am out of there, buddy. I'm out of there. So but I learned a lot of stuff, mostly what not to do. And anyway, it doesn't matter. I learned eventually enough to make some serious money. At first I learned enough to be dangerous, and then I learned more so that I can actually make some serious money on the stock market. And then a strange thing happened. I started making some money, and of course I started bringing home a lot of the toys, vacations, new house, new cars, all these things. People started asking, what are you doing, Hugh? What lottery did you win? Can I give you my numbers? How about if we split? I'll give you some money and we'll split it. Can we do that? And I said, no, but I'll show you. So we started a little website and just kind of posting what, excuse me, while I cough it up here. Just posting when I'm looking to trade every morning. And everything just kind of ballooned from there. I couldn't believe the response, actually. Everybody wanted to know, well, what are you doing? What are you looking for? How are you getting in? How are you getting out? What platform are you trading? What all these million questions? And so that's kind of where that started. Anyway, started making some good money, and everything just kind of grew from there. And then last year, we had the fortune of hooking up with Eagle Financial Publications. And in that mix came Aaron. So my experience comes from mostly the trenches trading. All right, I learned a few things, but all the things that I teach, all the things that I know and I do every day now, that's what I call it in the trenches. This is the stuff where you kind of got your fingers dirty and got burned along the way. But I would always write down these lessons. Okay, don't do this, because this is what it cost me now. And you start keeping a log of some of these things. It's actually amazing just how much you learn from your mistakes. Aaron didn't come from that same environment. I'm going to introduce you to Aaron, my partner in crime. He's actually the smart one, and we were both smart. But Aaron, I'll let you tell them where your background is and why they should listen to you. All yours.
Sure. Yes. Thank you, Hugh. Yeah. So when I was in middle school, I started to read the Wall Street Journal, and then I was about 13 years old, and I started looking at stocks and different stock picks, and Priceline, Netflix, different stocks, and I got interested in I started highlighting the different stocks and the different stock tickers. So after that, when I was 17, I opened my first trading account. I started trading penny stocks, and then and different stocks, and then took a little bit of a break during the .com bubble after it burst. But then after that, I came back and started learning Forex, and I tried a couple different strategies, but I took all the indicators off, and I started reading, higher highs, higher lows, ranges, things like that, Fibonacci, Andrews Pitchfork, trend lines. I do use a couple other things, a little bit more advanced, market symmetry, also time cycles, but I don't really talk about those as much. And then I studied for and passed my Series 3 exam, and became a commodity broker, worked for several different companies. And I was most recently a analyst at a commodity pool operator, which is similar to a hedge fund, and we had about $140 million under management. I was the main analyst under the main trader for the company. So I'm really glad to be here, and I'm really happy to have the opportunity to work with Eagle Financial and with you on DayTradeSPY. And I do just want to let you know that even though I come from an outside, you might think of me as a financial background. All that, I come from a very similar background as Hugh, where I had a huge interest in the market, and I self-taught. I was self-taught for most of my journey. I read major books, technical analysis of financial markets, and technical analysis of stock trends, and a few books on trading psychology that I share. I share a lot of those points in our Inner Circle webinars on Tuesday nights. So we both have a passion to help you to make money in the financial markets for both you, your family, to help to get some extra incentive in your life and work towards your own financial goals. So really happy to be here. Thank you.
And we're happy you're here too, Aaron, because together we actually have some really cool synergy working here in our trading rooms where when we make money, let me tell you. So we have a little saying, it goes on something like this, because Aaron comes from a different background than I do. He has this set of indicators, and so do I. And we like to say that when our indicators unite, our trades ignite. And there's a lot of truth to that, because when, let's say, for example, I'll say, you know what, I see a pretty strong support level. I think that we're going to get a bounce off support and head higher, and we're going to go up to this level up here. And Aaron comes to me and says, I see the same thing. Sorry. I've been fighting a sore throat for days, and it doesn't seem to be getting any better, but should have probably made some honey ginger tea or something. But anyway, and when Aaron says, yeah, I see the market going up, and here's why, and he gives us his indicators, which are completely separate from mine. Let me tell you, you better buy calls, because call options, that's where you're going to go, right? The market's going to go up. And it's uncanny how accurate this really is. A lot of people are making money in a trading room, and we're going to introduce you to that. And we're hopefully going to get you in there too, because if you're tired of just kind of spinning your wheels and I know a lot of people are, they're saying, and I get this a lot. By the way, before I forget, I put this other question up on the board here. What is your daily goal, folks? What are you looking to trade every day, and how much you're looking to make? Just put your answers up there. I was just going to say here that I get this all the time. How people say, you know what, I've taken courses in the past, or I've just kind of tried it myself, and I'm just tired of making a little bit and losing a lot, making a little bit. I mean, it's consistent. I just, maybe I don't get it. Maybe I need help. And I think that's the first thing you gotta accept, is that maybe you just might need some help. If you've been, like you say, spinning your wheels and not really getting the grip on how to make money consistently on the stock market. Now, Aaron and I have both been there and done that. And I can tell you from my own experience, I had probably more losses on this than everybody on this chat line. But I always knew there was money in the business. You know, that thing that, you just know deep inside, something, and I knew there was money in this business, because I would look at the highs and lows every day on the stock market, on the options market. I said, isn't this interesting? The low for this particular option is 10 cents and the high is $3. My goodness, is that like the 3,000%? Why? I'm not trying to get 3,000 or 1,000 or even 100% gain, but can I not get 10% or even 5 or 6%? So these are the questions that went through my mind. So I always knew there was money, but I just have to go and get my fair share. And that's kind of how I approached it. So we take different approaches than you'll find anywhere else. A lot of companies, a lot of training, they'll talk about things like, oh, the market is going down now, so we're going to go to the downside, or the market has gone up, so we're going to go to the upside. Well, where the market is and where the market has been is actually in many ways irrelevant to where it's going. You see, Aaron and I focus as to the future, where the market is going. That's what's important, not where it is right now. It might be down now. That's okay. That's fine, because we know that buyers are going to come back in and they're going to start buying at a certain point and driving the price up. So we always look and see, where's the market going? Very often when the market is shooting straight up, oh my gosh, it's going to the moon. We might look back and we might step back and say, oh, hold on a little bit. There's going to be some profit taking when it hits this point or that point. And then we'll look at going to the downside. And then of course there are the outliers, which is what happened this last week. We'll talk about that in a couple of minutes. And you never know when those are going to come out of the left field. But anyway, see a lot of people answered the questions here. How much are you looking to make? Okay, a lot of questions up on the board. Well, this is interesting. A good variance here. Okay. All right, that's cool. We can help you with that, folks. We can help you with that. So here's what we're going to talk about here. What is your so we'll give you a little bit of a segment as to where the market was last week and where it's going this week, what we think is going to happen this week. Then we'll get a little beachside chat. It's the summertime, so we're not going to have a fire. We're going to have a beachside chat instead. But I want to know what your experience is with training courses. What's your pain? Why would you not jump into a good training program? What is it that you'd be waiting for? Or what would it take to get you off the fence? Another question here. Do you have any seed capital to work with? I'm going to be fairly, I'm going to be frank with you. I mean, if you don't have a little bit of money, you're not going to make anything. And, this is not something where you start with zero. Yeah. You ever go to those areas? You must know those real estate courses. Oh, start with zero down payment and build your fortune. And in 2 years, you're going to have millions of dollars in real estate.
Yeah. Yeah, that's well. I think it's similar to trading where unless you put in the work, it's just a pipe dream. You have to put in the work and you have to put in the daily time. So a lot of these places are just selling the course, and you've taken those courses as well, where the people are just selling the course and they're not really in the trenches trading.
Absolutely. And I never really believe those zero down payment. You have to have some money down, and I unless you get into some kind of a high risk or high leveraged mortgage. Anyway, I'm not getting into all that, but you need a little bit of seed money. If you can get your hands on seed money, folks, you got a good fighting chance of making some serious money on the market. And the more you have, the better it is. If you're going to come to me and say, well, I only have $500, I'll say to you, well, okay, hold on to that, put it in your account, do not trade it, just paper trade. Keep adding to the account, Let me know when you get to $3,000, $4,000, $5,000, and then we'll talk about actually trading. again, do you accept trading first, or rather, do you accept that maybe you have to train first, and you're just one of these people that want to jump in? And I guess the next question here, are you willing to put in the time and effort? I mean, that's really what it's all about, right? If you're not willing to put the time and effort in, well, this is not a get rich quick scheme. This is not something you're going to just, jump in and suddenly you're going to be a rich options trader. Yeah, I don't want you to come in with that fallacy, because that's not the way it really happens. So here's the weekend review. This is what happened last week. And some of us did get caught with this news that we had midweek here. But what happened on Monday? We had a Chicago PMI report, came in slightly lower than expected. Excuse me here. Possibly reversing that good news is as bad news syndrome that we had. We were kind of toying with that now that the Feds have sort of settled down a little bit, and they're not threatening with increasing interest rates for the next little while. So now we may be seeing, okay, good news on the economy is going to be good news on the market, but we're going to wait and see before we kind of confirm that. Sometimes it is, sometimes it's not. But anyway, SPY found some strong resistance. We've been talking about that for quite some time at 358. Couldn't breach it, came down after hours, and ran up a little bit on upcoming earnings. So we're still in the midst of earnings here. Tuesday was a little bit different. No surprise, we had a Institute for Supply Management PMI report. JOLTS job openings and other economic news. Technicals brought SPY down to a level, closed at the mid 456s, but it was on Wednesday when we had a late day surprise. Fitch downgraded the U.S. On Monday, reflected poorly on SPY the following several days. We are no longer a AAA rating, we're a AA plus, and the market did not like that at all. Usually when you see those, that means interest rates are going to be higher borrowing costs, and of course more expense for the government. I guess Aaron, the more surprising thing is the Congress and none of those guys seem to be too concerned about that. It's like and Fitch actually kind of insulted us by saying was it a lack of like mismanagement in government or something along those lines. I'm just paraphrasing, but they're pretty critical about the way we manage our money, and they did not see the situation with the high debt. There wasn't very much concern. It's like, oh, no problem, we'll just keep increasing the debt. So they're concerned about that. Anyway, on Thursday, the fallout continued with the downgrade and America's credit rating. Comments regarding the growing debt burden and deterioration in governance. That's what they were saying. That did not bode well for the stock market at all. We bounced around a little bit, finished the day slightly higher than we closed. And on Friday, we also had a surge in late Thursday trading. Actually, it was after hours, I believe. Amazon and Apple, they both reported their earnings, and I think Amazon surged, tempered by a spike down on Apple, gave for weighty opportunities to wrap up the day or week on huge profit taking. More likely, though, continued credit rating concerns. By the end of Friday, we were down to closing up around 446.80 or so, 446.80 at the end of the day. So it was sort of a negative week here. Not sort of, it was definitely a negative week on the stock market. As a matter of fact, the S&P dropped 2.3% this week. Still up 16.6% year to date, though. Okay. NASDAQ and the Dow also down this week, 2.8% for the NASDAQ, 1.1% for the Dow. But year to date, we're still very, very much, over where we started here. NASDAQ is still flying high, almost 33% growth this year alone, as we're heading into the, into the second half of 2023. So the big news, U.S. downgraded. U.S. debt downgrade. Labor market's cooling, but slowly. Wage growth is still a bit of a concern. We still have some of that. And growth and inflation, solid foundation for equities to sustain an upward trend, but they expect more volatility in the second half of this year. And I'm going to correct this typo there. All right, so here's a little chart on the labor market slowly cooling down. All right, U.S. payroll gains, so we're coming down, but it's still growing, but you can see that it's coming into line now. And that was one of the big concerns with the Feds in raising their rates, that okay, inflation seems to be tempered pretty good, but the labor market is still very, very strong. And I know they're concerned about that, but that seems to be coming down now too. So they're probably going to be looking at this next 2, 3, 4 months and determine whether they should bring in another gain or not. They're certainly expecting one, I think, in November, but we'll see what happens. They're trying to get this inflation right down and settle down real good. Seasonal chart. This is a seasonal chart. Anybody who doesn't know, that blue line at the top is where SPY is now. And by the way, we only trade SPY, which is the stock that follows the S&P 500. So we're just talking about the cream of the crop here. The red line on the bottom is a composite of the last 5 years closing balance on the daily charts. So you can see how, we're trending here over the course of a year. And if you want to take a look at this as we zero in and focus on the last week, going out a week, we actually rose about a point last week. Seasonally, SPY is up about 4 points going into the next week. So you kind of want to go with the trend if you can, if that trend is going to continue. Again, no guarantees on that, but we'll see if that trend will, in fact, continue down that way. So we'll see. Forward looking, we have Monday. It's a low, no news day. Same with Tuesday. Excuse me, but earnings do include UPS, Duke Energy. So kind of winding down on the earnings as well. On Wednesday, we have oil inventories. Earnings include Disney, Wynn Resorts. Thursday, we have a consumer price index and unemployment claims. These are going to be pretty major. And Friday, we have PPI report, consumer sentiment, and inflation expectations. Okay, so that's coming up on Friday rather. According to Yahoo Finance, it says over 2,900 companies are still reporting earnings this week. Of course, many of them are not S&P 500 companies. But in aggregate, we'll see if we do have that surge, that rally coming up, if these companies are going to be reporting better than expected numbers in the coming days. So we'll see what happens. But Monday and Tuesday, probably mostly range-bound trading, low volatility. Expect that into Wednesday afternoon. As we head into Thursday and Friday, there'll be higher volatility because of the news that's coming out. Those are going to be inflation news, PPI numbers, and consumer price index, and so those are going to be more volatile, and the market is going to pay attention to what that's going to be all about. And PPI, by the way, is producer price index. That's another. I said that's about Friday. It's going to be on Friday. Thursday it's going to be CPI. But the PPI report looks at finished goods, producer price index. When producers charge more for goods and services, the higher costs are usually passed on to consumer. This too is another another indicator that the Feds use to gauge inflation. So you can be sure they're going to be watching that. Earnings, I don't think, are going to be materially affecting SPY this week, because I don't think any of the FANG stocks are reporting. I think they've all reported already this year. This term, I should say, FANG stocks. That's the those top 5 or 6 companies: Facebook, Amazon, Apple, Netflix, Google, Microsoft. They're all in there. Tesla would probably be in that group as well. So when those guys, they control somewhere around 25-28% of the total capitalization of the S&P 500. When after they report, the rest is just sort of anticlimactic, I would say. So I don't think we're going to see. Might see little spikes here and there, but not that much. So that's kind of what that's all about here. Trading could be range bound unless ratings downgrade continues to weigh in, because it's going to influence higher interest rates, right? So they're probably going to be still talking about that. I'm guessing, and if that's the case, we could see a move to the downside perhaps on the market, but it's going to be tempered by rate earnings, and possibly move back up. We'll see what happens. Many opportunities out there though daily. We teach you how to spot them, how to trade them, and that's really kind of what's important. So before I get into the beachside chat, I just want to tell you about the trading room and why you need to be there, why you should be there. I guess you don't really need to do anything. The only thing we have to do, I guess, is pay taxes and die. I guess, and even if you die, it doesn't mean you stop paying taxes. But definitely, there's a real reason we keep promoting the trading room, folks. These are live trading workshops. These are training grounds. These are moderated by Aaron and yours truly, myself, and combined we have over 40 years of market experience. I don't think this is just small potatoes kind of stuff. The stuff that we teach you, all that material we teach you, doesn't come out of some theory or textbook. This comes out of those things that we learned the hard way, and we spent many hours learning and struggling and tweaking and everything else. Our strategies, they come alive. These are we trade the strategies that we talk about every morning, 9:20 to 10:30. Learn from the best, folks. These are interactive sessions. They're exciting. All right, exciting trading, and you can ask questions. That's what it's all about. Aaron and I are the ones who see the questions, so go ahead and ask whatever you want. We'll address them. And again, we teach what we trade what we teach. Watch us make real trades, real setups using real money. You can either paper trade or trade in real. Again, questions, get them answered in real time. We've got the longest running live trading room. Been doing this since 2010. And the exciting thing here is, look at that. She's extending her arm to show you that we have extended summer hours. Monday, Wednesday, and Friday, we take this baby right to 11 o'clock Eastern time every Monday, Wednesday, and Friday. Our regular sessions end at 10:30, but these extended sessions facilitate more training where no one gets left behind. No one gets left behind. I guess my question to you, ladies and gentlemen, can you afford not to subscribe? Because it's only $699 for 3 months. Basically, pick your mentor, Marion or myself, and buy us a submarine sandwich. Just buy us a Subway sub every day, and then you get yourself two, not one, but two mentors, two coaches in your back pocket for an hour to an hour and a half every day. How cool is that? See, Aaron, we can be bought, right? Just buy us a sandwich. That's what it costs. So
Yeah, that's funny.
it's I wish I had a Hugh when I was learning this stuff. My goodness, I would have saved myself an awful lot of money. I can't even begin to tell you. So that's what it is. You'll find the link either on our website, DayTradeSPY.com, which I will show you. Let me just pull it up here. Okay. I think if I punch up date, you know what they they have this still right here. Let me just pull it up right here. Okay, so here's the website. And if you go to the where would it be? Subscribe to the trading room. Subscribe now to the trading room. You can pick it up right here. Or I believe there's a website that's going to be presented to you after this session. Just scroll on down right here. It's all on your credit card. You don't have to do anything. And click on You're Not a Robot, place your order, and get online. That's how easy it is. And that's really what it's all about, folks. Get into the trading room. All right, so beachside chat. So I want to tell you that I've been working with a gentleman who called me the other day, and he said, Hugh, I kind of blew up my account. Excuse me. I said to him, I'm down quite a bit, and we got talking. I'm just kind of going to go over this a little bit here with you guys, so you can learn. This is one of the things that we do. We teach people, and we do a lot of mentoring and stuff. And he was saying how he lost all this money, and the first thing he wanted to do is just get back in and just make up for it. I said, oh, hang on, buddy, not so fast. You lost all this money. He said, how much do you have left? He said, I don't know, $3,000-$4,000, not much. Okay. So the worst thing you can do now is to jump back in and start trading it when you're emotionally charged. Go, good or bad. If you're emotionally all charged and wound up about something, you're probably not going to make a good decision on your trades. Which is why, Aaron, love is so expensive, right? That's why people, they're all emotionally charged with love and infatuated, and they don't look at beyond the immediate, oh my gosh, I'm so in love with you. Then they make foolish decisions. they jump in and they, they get married in a fever or whatever. And years down the road, they say, oh my gosh, what did we do? How could we, so, what is it we did we not know that we're not compatible? We don't like anything that the other likes, or well, you know what I'm saying? Anyway, you got to be rational about these things, right? You got to be rational. So
yeah, that's and those are some of the major enemies of trading. Fear of missing out. The also revenge trading, also over leveraging or over trading your account. If you lose a trade, jumping right back in, especially in volatile times like this, you have to be patient, wait for the setup, wait for the market to go back in your direction of where you're looking at. And this was a difficult week to trade. So because of the downgrade, if you're looking at calls, or even if you're looking at puts, some of the times the opportunities weren't always easy to find. And if you did get in, the market was snapped to the downside pretty quickly. So there was some issues this week, but stay positive, stay focused, and trade with that in mind, that over trading and other things are an enemy to a trader.
I like what you said, revenge trading. I think you used another term as well. Can't remember what
Fear
it
of
was.
missing out.
Fear of missing out. Yeah, these are, folks, these are real, right? Don't as luring as it might be and attractive, you want to get back in there and make up for it. You're sitting and thinking, oh, if I could just reverse time 2 minutes or 5 minutes or whatever, and just take that over again. It doesn't work that way. So the best thing you can do when you blow up your account like that, or whatever happens to you get a bad trade, is to simply stop and go through those emotions, get through them. I know we talk a lot about this stuff, eventually, you're going to be, okay, so you're going to be angry. You're not going to believe it. You're going to be in disbelief, anger, all this sets in. And eventually you're going to come to accept that, well, what I have left. And yes, you can work with that. And you can definitely work with that, because we actually started in April. We took $2,000 and turned it into $10,000 by early July, which was just under 3 months. And by the way, we're going to do that again. And I believe September is probably what we're going to roll that one out. And we're going to do that again. And you can be with us. But I decided to help this gentleman because this is what we do. And so I said to him, okay, I don't have the license or the authority to tell you what to do, but I can tell you what I would do in this case. And I'll tell you exactly what I'm going to do. So what I did there was let me see if I can get to this here. Okay, so I traded along with him. I said to him, so I'll tell you when I'm going to buy. Okay, I'm going to tell you when I'm going to buy. I can't tell you to buy, but I'm going to buy based on what you told me. So we're going to go in light. We're not going to go in heavy. We're going to go in very light, and we're just going to first build up your confidence. All right, not going to make a fortune, going to make a little bit of money here, but not that much, just to build up your confidence. All right, that's the important thing right now. All right, so here's a trade I got in on, what was the date on this one here? I can't remember. This is several days ago, August the 3rd, which would have been the Thursday. So at 9:57, I bought the 449 calls for $1.97, sold them 4 minutes later for $2.10. Total investment, total investment was $591 plus commission, 6.7% return on investment. And we only had three contracts. Okay, didn't want to go in heavy. I wasn't going to use up all its capital. I want to still keep that that capital management technique and still in place. So just because you got $3,000 doesn't mean we're trading the whole thing. We're not. So I only just want to trade, say, $500-600, and we got it for $591, and we made $39. Okay, so it's lunch money. All right, the next trade was the following day. All right, which was the Friday. Did a couple trades on Friday actually, and we got a cash account, so we're using a cash account. It's got about 3,000, I think it was, to work with. So the first trade here picked up 24 cents in 2 minutes. Got in right away at 9:32, out at 9:34. That quick. It was just that quick. Bought for 331, sold for 355. 24 cents in 2 minutes. Invested $1,655, a little over half his account, maybe about half, I'm not sure. Walked away with 7.3%. That's $120. That was on 5 contracts. So that was a little aggressive. Just want to show them that, things are going good, and the market was going in our favor. That was on the calls again, the 451 calls. And as it was going up, let's just stay with this a little longer. So we stayed that with that for 2 minutes, 9:32 to 9:34. It's a long time to stay with a trade for 24 cents, isn't it? But so he's pretty happy about that. Okay, bought supper. And trade number 3 the same day, picked up another 24 cents on the 451 calls. This time in at 10:19, and we stayed that one for 11 minutes, right? 24 cents in 11 minutes. Invested $828. Again, only 3 contracts for another 8.7% return on investment. Again, not much money, only $72, but he did okay. So 72 plus was it 120, so 192, just under $200. Total invested in any one time. The most invested in any one time was $1,655 or something, roughly half of his capital. And he was going to go into a trade again. I said, no, you're done for the day. Well, why, Hugh? I said, because I told you, you're done for the day. Just leave it alone, because I don't know where the market's going. I can usually tell where it's going to go early on in the day, but as the day unwinds, you don't really know where the market's going to go. I mean, you think you do, and I know Aaron kind of knows a little bit better than I do because of his longer term trends, but you don't know when they're going to come out with some kind of news that's just going to completely destroy you. And as it turned out, these were call options. They all worked in the morning on Friday, but if you look at the charts, I don't have the charts in front of me here, but market rather collapsed on Friday afternoon. And had he gone into another trade to the upside, which is probably what we're looking at doing, that probably would have been a bit of a disaster for him, especially if you're holding this overnight into next week. I don't even know, the market dropped what, about 7-8 points or something on Friday afternoon. I can't remember, but it was quite the move to the downside. So make your money in the morning, get in, get out. You're done. When you're done, you're done. Keep watching it if you want. If you want a paper trade, great. But he's kind of getting his mojo back slowly but surely. So I want to show you that yes, we do work with, I guess one of the this alludes to the fact that sometimes people think that you need a lot of money to get in with what we do, and that's just simply not the case. We work with people with small balances, people with large balances, all over the place. So I just want to tell you that if you have a small account, go ahead and join the trading room, because that's really where you're going to hopefully turn into big money. So okay, yeah, let's get some questions here. I got to work on psychology after taking a break and manage my wins, not get too high or too low. Lost too big early in the year, poor trades and risk management. Excited to be back and keep learning. Thanks for that, Mark. Good to have you back. Glad to recognize the name. Good to have you back. What is your typical trade size? $1,000. My typical trade size is 10 contracts. I'm looking at a couple $1,000, $2,000, $3,000, $4,000 or whatever it is. I usually like that for myself. These days I'm doing about 10 contracts. When I'm doing this on my own, let's say sometimes I say, Aaron, can you just do the trading room? Because I kind of want to just trade on my own today, and I got to focus, because I find that when I'm talking all the time, I'm not paying attention to my own trades, and that sometimes doesn't work out very well for me. But when I focus on my own trades, I'll go higher, 20, 30, 50, 100 contracts, depending on what it is. But I don't want you guys to just follow along blindly. Everybody's going to have a different risk tolerance. Everybody's going to have different capitalizations and different understandings of the program. All right, it's there's a lot of science in it, but there's also an art. I think the more you do it, the better you get at it. The better your gut feel, the better you just know this is a good entry. Here's why. It's going up, it's going down, and I think that's important. So yeah, but if you have $1,000, I would say get in the trading room. Don't trade the 1,000 yet. just start paper trading with us, because eventually you're going to build up to $1,000, hopefully, and then we have $2, $3, $4, $5,000. Then you can start trading real money. Okay. What's happening with the 10K challenge, Aaron? What is the final thing on that anyway? We have so many meetings on this stuff. I kind of forgot. Is there a date on that?
No, we don't have a necessary date yet, but I think it's going to be starting in the second week of September.
I think so too. I remember mid-September we should start that up again. So yeah, so you want to be in on that, folks. You want to make sure you get in, and actually the earlier you get in the trading room, the better you're going to learn the system and be very familiar with it, because then when we start trading real money into $2,000 to $10,000, you're gonna get good at it. So hopefully you'll get good at it. So Jan, good to have you here. Jan D, pick of the day member. What's the best way to trade it? Okay. Previously mentioned the 100K challenge. So yeah, we moved the 100K back to the 10K challenge because I think more people are probably more comfortable taking 2 to 10 than to take 10 to 100. And if you're one of those that want to take 10 to 100, just multiply your 2 to 10K trades accordingly. I think most people probably are more comfortable. At least this is what I'm sensing from what people tell me on these one-on-ones. They just feel more comfortable with the 2 to 10. I'm thinking here that it's a little more manageable. So what's the best way to trade the pick of the day? We give you rules on that every day it's sent out. So what you want to do, this is, for those who don't know, the pick of the day is an option trade that we are interested in trading at market open. So it's essentially anchored in time. So we're saying as markets go up, they go down. And from this starting point here, we think the market's going to go up. We're going to give you a call option that we're interested in trading. And you would buy it at market open. So what you want to do there is when the opening bell comes, you want to see is the pressure to the direction that we're telling you. If we're looking at calls, you see the pressure going up. So you want to get in there within the first 2 minutes. All right. You see a green pressure to the upside, buy it then. But buy a limit order and wait a few seconds for the bid-ask spread to settle in nice and tight. Sometimes, especially when you have a wide gap, you'll see a bid-ask spread very, very wide. You don't want that. You want the bid-ask tight spread to be very tight, within 2, 3, 4 cents of each other, depending on the option. And that's then that's telling you that the option actually has a good price structure already. It's that is the price. It's not something way out there. And make sure you use limit orders all the time. Don't use market orders. A market order might get you a buy into that option, but you might end up paying a lot more for what it's worth. And get into that trade like as soon as you can within the first 2 minutes. Don't wait until it starts reversing back down or something. You want to get it when it's going your direction. Okay. And then as soon as you get it, put in a sell order. I like to use a 6% get till cancel order. And then just hopefully it'll happen. It'll give you a profit fairly quickly. Sometimes you may have to wait a little bit, but I found that markets don't go in straight lines. They zigzag up and down, and you might actually have a reverse on you a little bit before it comes back and delivers the goods. So that's kind of how you do that. So, all right. What other questions do we have up on the board here? Let me take a look here. Let me see. All right. How long should we be in the trading room to get good? Well, I've got some people that are they get in the trading room and within 2, 3 weeks they got this thing mastered. They're just going full guns and they're doing well. Then I've got some people that are in there for years. Let me just get out of this one here. Get back to the beach. Does that look inviting? Does that water look like you want to just jump right in and cool down? I don't know about you, but it's been pretty hot around here today, Aaron. So anyway,
Yeah, it's been about 90 degrees today. So we didn't really spend much time outside. We actually, and it was raining, so we went to the trampoline park. But that beach does look pretty inviting to me.
I wish it rained up here. It sure didn't. It was just cloudy and very hot and humid. Oh boy, it's gonna be not good. Anyway, yeah, I mean, listen, I tell people be in the trading room as long as you can. I mean, forever. We've got some people there that have been for years. You got one gentleman, he's in there every day. He's been there since what, 2000 and I want to say 2008 or something like that, or 2012, something like that. He's been in there for, I guess, long time, years. And because the longer you're in, the more things you're going to be exposed to, the more market situations. No 2 days are the same on the market. As long as I've been doing this, I cannot say, oh, today was exactly like such and such a day. It isn't. No 2 days are ever the same. There's so many different factors that are affecting the market, and the more exposure you get to these things. I mean, this last week too, we had the surprise attack from the Fitch trading, from the Fitch rating people, and that came out of nowhere. And all of a sudden, the market did not like that, and it just went down, down, down. And I think at that time we were looking at pushing up through 358 or whatever it was, or 458 or whatever the number was. Can't remember, but well, that's all that we needed to have the catalyst all of a sudden tank the stock, and then you don't know where it's going to go. Like, you don't know, well, where's it going to catch support? I'm finding that well, it's going to catch support somewhere. I just don't know where it's going to be. So you find a level, then it breaks through that, and then I've got Aaron telling me, oh, it's going to go way down here. And oh my gosh, okay. So, and he was right. Congratulations. I know some people made a lot of money on puts during those days, but I was holding on to the calls. I mean, I didn't have it. I wasn't in the market at that time, but earlier in the day, I had calls and I did okay on them. So another question here. Do you have any references? Do I have any reference? You know what? We have lots and lots and lots of references. I don't know if the testimonials are up on the website at all or not. I know we have testimonials. Aaron, let me see if we can find that. I don't know if they put them up there or not. If you want testimonials, we've got let me just see, free trading. I don't see where they are posted. I know if you email Jim or customer service at DayTradeSPY, they could probably provide you with testimonials. The question, if there's some people we can refer you to, the answer to that is no. But the reason is because of privacy concerns. And I can tell you that nobody is more, ticked off over this privacy issue, because I would love to get out there and just ring the bell all the time for all the winners that we have, which we do in our trading room. But I want to shout out their names. Oh, so-and-so, way to go, man. I wish you could get a picture, you put it up there. And we have a lot of people who are doing very well. But unfortunately, we are sort of bound by this privacy thing. We're not allowed to, divulge people's personal information and all this kind of stuff. So for that reason, we can't direct you, go see so-and-so, go and see and so here's his email address or his phone number or something. But we get accolades all the time with people's results and how they've been trading and all that. So no shortage of that, folks. No shortage of that. And you know what? You don't even really need it. Just get in the trading room, follow along. Get in the inner circle. You'll follow along, because we every day in the inner circle we have our updates, our afternoon updates, and we show you exactly what we traded before a live audience. You see everything we have, so you're going to see very quickly that what we're saying is true. It works. We don't cherry pick our trades. We don't just give you what worked for us. We give you the bad news too. So yeah, and for only $6.99 a month, or so 3 months. 3 months. That's what, about $200 a month. A little bit less than $200 a month. I'd say that's a pretty darn good deal. So trading room again. In the summer, we have extended hours on Mondays, Wednesdays, and Fridays. We start at 9:20, go till 11 o'clock Eastern, and this way we have time to answer everybody's questions that may not have been answered beforehand. So I think it's a great deal. All right, any other questions? Okay. Interview sessions. Yes, we have interview sessions. Go to our website, DayTradeSPY.com. Let me just see if I can pull that up. If you want to check in with us and maybe discuss your goals, your aspirations, just go to our website, DayTradeSPY, and over here it says schedule a meeting. It says click on that and go to our online calendar. Just punch up your time zone. I think there's a segment here for your time zone, and you'll see where you can schedule a date and time where we are totally committed to talking to you and at your convenience. Okay, So get in there and do that, and we look, we'd be happy to talk to you about whatever you want to talk about when it comes to that. So, all right, if you're going to be telling me about your strategy and why it works for you or doesn't work, I don't really care. Sorry, no offense, but we're talking about our strategy, why ours works for us. It's like anything else. I always tell people, look, when you lose your car keys, you find your car keys, you stop looking. I'm not looking for anything else. And I had this, the reason I say this, Aaron, is because the other day I had one of these, people come up and they say, oh, well, they book an interview and then all of a sudden they're telling me all their things that they're doing. And I'm trying to say, well, are you interested in what we're doing here? Is this why you're here? Or you just want to share your ideas? And I'm trying to be nice about it, but okay, well, listen, I got to go now. You're 15 minutes, but, I'm not interested in covered calls or married puts or any of these other things. I've done all that. Didn't work for me. Maybe it works for you. More power to you. If that's the case, what are you doing here? But anyway, you're here. And if you want to know what we're doing, we're really, really happy and excited to tell you about it. All right. Anything else, Aaron? I think that's about it. With that, I think we're going to call it a night. Oh, I think we got another there. All right. Thanks for joining us, folks. We'll see you, hopefully see you tomorrow morning in the trading room. Thank you, Aaron. Have a good one.
Everybody.
Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you